Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, April the 12th. The year's 2022. Let's talk trading. Master of One, Part 3. As always, these videos are for educational purposes only. Your results may differ from mine. Just a quick reminder, when you're trading, always make sure your risk management is in place. Never lose more than you're willing to lose on any one particular trade. Well, today has been a fun day, trading day so far. A lot of movement in the pound. We're right now sitting at 30.40, what I like to call the launch pad. It's already launched from 40 to 50 once. You can see we're 92 pips or 991 below the open of the month, 59 off the low, and 126, 125 off the high. As far as the week goes, we've turned green on the week. All gaps have filled. We're 8 pips above the weekly open at the moment, 14 off the high and 54 off the low. Remember, seasonality says that we form a bottom in March and we move higher into the end of April. We are within the opening range of the week so far, still below the opening range of the month. 486 pips below the yearly open, where Monday was an inside bar, and we are still within that inside bar range. Range-wise, we're at 60 pips for the pound. At the moment, we've got 4 pairs over 100 pips in range. Okay, we've got the daily open here. You see we've crisscrossed it. We shot through it on the news that came out, and we also shot through the weekly open, putting us positive for the week. Red rats, get ready to feast. Be careful, of course. We've got enough range to trade it, but as you can see, the pound is trying to push up. I think it's trying to hit the 60 for that weekly pivot. Speaking of the weekly pivot, it's at 130.60 right there. Daily R1 is right on top of it. So if we push through yesterday's high, it looks like we'll hit it. Taking out today's pivot, we're close to the weekly, and we're still a bit a ways from the monthly, 142 pips at the moment. We're in the upper wick zone of yesterday's daily candle. You can see yesterday's candle was mostly wick. And looking at the scalper, the higher low, lower high scalper, you can see right here the highest lows right on the 40 line, which is what I like to call a launch pad. And had you taken some 40 longs, you could have picked up a few pips. On the Wall Mall price action here, you can see we cut through the 50 and the 40 this hour. So there was definitely pips to be picked up. And last hour when the news came out, you can see we broke through the 20 for better than 10. Then we broke through the 30 for better than 10. Once again, when price action is like this, you take your pips off the table quickly before the market takes it back. We didn't quite hit the ATR range on the pound yet, but we are in the upper wick zone and the upper rat zone, and we did put in a new high this hour. So you can see the holo trade here. We're already 6 pips to the good on the downside. Now, and the year-to-date range by month, you can see we're only at 93 pips. But I want to show you, we talk about master of one. Sometimes you want to try something new. And the best way to do that is clear your chart of distractions. You know, a lot of my charts, you'll see a bunch of multimeters, and you might see a few other things over here. You might have might see the three level ZZ indicator, putting the numbers up there, my dynamic support resistance. There's a lot of different things. But I was looking at the chart the other day, and I saw something really interesting. I was talking to somebody about the turn trade, and I noticed that if you look back the high and low 2 bars ago, it seems to give a clear signal as opposed to just looking at the previous candle when you want to take a breakout. And so right here, we've got a turn scalper. Now, what is a turn trade? You want to come off a bottom. You want to have a bear candle followed by a bull candle. And then you want to take the break of this bear candle high. And so you can see here, and it's only good for this candle. So there was no signal there. None. And then you can see here, there looks like there's a turn trade, but you see turn trades indicate highs and lows. So for example, let's see, let's just bring up a quick daily chart. So you can see right here, this was a low, and the price turned, and then you can see here it broke the high of the candle 2 bars ago. And so that's why I wrote a scalper indicator. So it tells you when to get ready, when you've got the correct candle pattern, and then when it actually hits the trigger. So back to M1, the only difference is this doesn't wait for a bottom or a top. That's why it's called a scalper. It's looking to take little scalp trades. So for example, right here, this wasn't a turn trade, because this candle and this candle were both black, as opposed to seeing a white candle followed by a black candle. But nonetheless, if you wanted to, you could still just take the 2 bar ago high-low breakout. Does it work every time? Of course not. It really doesn't. You can see right here, if you would have taken this, if you would have tried to take this trade here, it goes against you. That's why we use stop losses. But it's one of those things where if you master it, it can prove to be a profitable method. The other thing is, if you're wondering what I did here, okay, I modified the mid dots indicator. I don't know if I put this version out. It also allows you to draw different things depending on what you're wanting to show. So in this particular case, we're doing the previous high-low. I say draw an arrow, but you can draw a line, you can draw histograms. These are all the different things, but it really, you can try drawing a line here, but it looks like a squiggly, and it doesn't really help you visually, at least not for me. That's just way too busy. So I prefer, they say, an arrow, which in my case, I use the diamonds. So you can see here price is at a relative low. When you look here, you see it's bounced off of this area once. And so you can see here that would have been one type of turn trade where you take the high of the previous candle, but this turn trade you actually break out of 2 candles ago. And once again, this right here is not a turn trade because it doesn't have the pattern of bear bull or bull bear. That's what you're looking for. So for example, right here, if you would have taken this trade, there was a little heat, but then you see here, you wait it out. And there were pips to be made. Now somebody might say, okay, but where should I put my stop loss? Well, if you look at it, where should you put your stop loss? Most likely, you want to put your stop loss at the high of the candle where you're taking the short signal from. And so you might say, well, what's the RR? Don't know what the RR is. This is a more or less a dynamic trade here. And you can see here, this wasn't a turn trade, but once again, just trading out of 2 bars ago, it just seems like it pays off. I'm not sure why. In fact, I've named just the high-low 2 trade, and there's different variations of it. But once again, master of one, you master one thing. The simplest is not even to look for the candle pattern, but just to look for it to cross the high or the low. And right now you can see on this particular bar right here, the green diamond, that was the entry of 2 bars ago. And you can see there was a couple of pips to be had. So for example, if you happen to be trading 6 lots at $60 a pip, you get 2 pips after commission and spread. You usually can put a $100 bill in your pocket. So if you make 10 of those trades without a loss, you just put $1,000 in your account. 5 would be 500. And so depending on what your daily goal is, what your account size is, what your shake point is, what I mean by shake point, if you put 6 here, if your hand's shaking, you're trading too heavy. So you might want to back it down. But this is, once again, simple. And if you don't have the mid dots indicator that I wrote, you can use TROHL5. What I have here, I just said high 2, low 2 ago. The default is show high and low true. Then you come down, and what I have here is line started bar. You set that to true. And current range period. Actually, my period current, my bar is 1, my shift 2, and that'll give you the high and low from 2 bars ago. And so you can see here, had you taken this trade, there was a lot of pips to be had. So fellow traders, master of one. You don't have to master one of my methods, but master one of yours, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.